SSAS, which stands for a small self-administered scheme, in my view, is completely unutilized by business owners. It's basically a pension fund, and but the benefit of it is control and flexibility, whereby you have full control over your pension funds. Not forgetting, well, there's many benefits from a commercial perspective, and loads of significant tax benefits as well. And in this video, I want to outline just 3 of them. There's many more, but specifically 3 tax benefits. Before we go on, don't forget to like, comment, share, and subscribe to our channel. My name is Omar. I am a chartered tax advisor, and this video is brought to you by ASWATAX. Moreover, we are registered with HMRC as scheme administrators. So do get in touch if you'd like to have a chat. If you find these benefits worth looking into a bit more for your business, then think about it. So number 1 is in no particular order. It's a completely freestyle video, but no particular order. But number 1 is, look, we know corporation tax rates have gone up to 25%. Okay, and pension contributions are allowable deductions for corporation tax purposes. So you know how you have wages, you can deduct it from your gross profit to get your net profit, therefore reduce your tax. And you know, any other expense, you can also reduce your pension contributions as long as it's not excessive. So number 1 is that the business owner and other family members, they can make pension contributions from the company into the SSAS completely allowable for corporation tax purposes, therefore saving tax at 25% potentially. And currently you can make contributions of 40,000 per annum, and that's going up to 60,000 pounds per annum. So let's just say you're watching this closer to next year. Let's just say you're watching it now. 40,000 at 25%, 10,000 pound tax saving immediately. So you set up the SSAS, you make the contribution, you've saved 10,000 pounds immediately. If you've been a registered member of a pension scheme previously in the previous 3 tax years, then effectively you can really and truly transfer 160,000 pounds to the SSAS. Obviously, you need to take advice on this, and this is where we can help. And we have to do it. You know, you don't just do anything; you do things properly. But regardless, let's just say we made a 160,000 pound contribution to the SSAS. 160,000 at 25% is 40,000 pound immediate corporation tax saving. You know, business owners sometimes they keep talking, oh, how can we save tax? How can we save tax? This is a method to save tax. I'm just giving it to you. Okay, but obviously you need to involve professionals like ourselves to set up and, you know, coordinate the SSAS and do things, as I say, do things properly. You don't just do anything. We're still on point number 1, which is that, and let's just say there's husband and wife and children as well. So that's 40,000 each, and then going up to 60,000. 60,000 at 25% is 15 grand save. So keep that in mind. Immediate benefit from a corporation tax perspective is that you reduce your corporation tax. We have other mechanisms where, you know, we can exceed 40,000 pounds, but that's something you need to speak to us about, and we can discuss that in further detail. Point number 2, or tax benefit number 2. Did I say I'm going to say 3 or 5? I think I said 3, right? So I'll stick to 3. Tax benefit number 2 is that a SSAS is completely free from tax. So whether it's income tax, capital gains tax, corporation tax, inheritance tax, there's no tax within the SSAS. Okay? Now, I'll relate to you an example which you can sort of think about, which is that, let's just say, some of my clients, for example, we set up a SSAS for them, and one of the reasons could be that they purchase commercial property within the SSAS, which the trade then uses. So you make the contribution from the trading company into the SSAS, and then the SSAS purchases the valuable asset, which is the commercial property, rather than the company itself. Why? Because many reasons, but the SSAS is a separate legal entity. It's a pension fund, it's a trust fund. So you're protecting the asset, but also you're getting the tax relief when you're making the pension contributions of the cash going across into the SSAS bank account. The SSAS then purchases the commercial property, but then rents it back to the company. Again, the company, the SSAS can charge the company market value rent, which is an allowable deduction again for corporation tax purposes. How can we save tax? How can we save tax? You know, these are ways that you can save tax. I'm just giving it to you. So the SSAS charges the company commercial rent, market value rent. Company gets an allowable deduction, but the SSAS on that rental income pays not a single penny of tax, of UK taxation, of any tax. So think about it. I'm just letting you think about it. No taxation. Same with capital gains. So if the value of the commercial property increases, I'm sticking to that example. If the value of the commercial property increases, then the gain is not subject to capital gains tax. The value that's been transferred out into the SSAS, that those assets or that whatever value sits in the SSAS is outside the individual's estate for inheritance tax purposes as well. So that's benefit, massive benefit number 2. The tax benefit number 3, okay, this is not exactly a tax benefit. I'm going to go a bit off topic, but it's still a benefit, it's a massive benefit, is what you can do with the funds within the SSAS. You can have it sit there, that's fine. Or you can invest in stocks, shares, crypto. I've seen crypto recently. Younger business owners, they're a bit more excited, you could say. So crypto, commercial property, not residential property. There's potential other ways around residential property, but generally speaking, we'd say commercial property. And what the other benefit is that you can loan back. You can potentially loan back 50% of the funds within the SSAS back to the trading company. So you took it out, you took all the tax relief, you saved corporation tax at 25%, and then 50% went straight back into the company, for trading purposes, for working capital, for other investments. And I hope that's interesting. I hope you find it interesting. If you do, then drop me an email, which is down below, omar@aswatax.co.uk. And we advise business owners in all stages of their life cycle. From a tax perspective, we have everything covered, whether it's succession planning towards the end, or whether it's R&D, capital allowances, growth shares, EMI schemes, SSAS pension funds, you name it. We can advise and we can assist you. We are chartered tax advisors, regulated by the Chartered Institute of Taxation. And there are other benefits of SSAS, of a small self-administered scheme. Many benefits. I just thought I'd keep this video nice and short. 3 benefits we mentioned. 1 is the immediate corporation tax savings. Number 2 is no tax within the SSAS. And number 3 is you can potentially loan back funds back to where it came from. Speak to you soon.